The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 18th day of October. My pleasure to be here Monday through Friday, noon until 1. So, 23,000 would be strong resistance. Now, it would be easy for me to say, oh, but it's IBM up, giving the Dow at least 80 to 90 points, which means you're really only up about 50. That's not really it. The Dow has no clue who, what, or where. The price is the price. So I want to deal with that. Funnily enough, I haven't changed my opinion, but absolutely going to 23,138 right now, up 140. Price is the price, and we're way above 23. But that whole 2,300 to 23, I would even put it to 23,250. The way I'm looking at it, there is still a really good chance that we consolidate and that this 23,000, we hang around 23,000 for a lot longer than one would imagine. All right, let's just see. Now, let me go through the numbers. You're looking at the S&P only up, the futures are only up $2.50. Look at this tiny little, from this peak E that was made here in the futures, the September at 2550.75. Is taking you 1, 2, 3, 4, 5, 6, 7, 8, 9. And almost every other day, there's been a new high. So it's gone to a leg D. And that's gone from the, of course, if I could just remember what I said, 2534 level to today's high of 2562. 1, 2, 3, 4, 5, 6, 7, 8 in 8 sessions. Call it 9 if you want to include that peak E. Now, as far as I'm concerned, there's a methodology within the Chapman wave that says, and this is one of the things that I've been looking at, and this is one of the reasons why I'm saying what I'm saying. Look, the MACD in the daily chart is starting to move down. It is very close with the histogram narrowing, meaning the differential, the 9-period differential, the green line is getting closer and closer to actually touching and then breaking the slow-moving average. That says to me that theoretically the upside should be limited to pops and drops, not a breakout to the upside from here. It would be very unusual in the second arch formation to do that. Okay. The stochastic is what I've been pointing out to subscribers. It's strong at 96%. I expected it to pull back deeper. It didn't. It's held at the 95, 96% level and flattening, and that to me is very strong. The on-balance volume is a second clue that says becoming toppy. And that's all it says, becoming toppy. It doesn't say exactly when, but it says becoming toppy. The weekly chart just breaking out in the MACD, stochastic soaring to the 96% level, on-balance volume is strange, having one big swoop to the upside. That's all very positive, and that suggests in the E-mini that the 25 14 9-period exponential moving average is going to be key support. It could take a long while to get there if we continue going to in the sideways slightly higher pattern, and even if we start to have a choppy slightly lower lows and lower highs pattern. It would take a news story, and I'm going to get to that as well over the next 2 days. It would take a news story that starts to permeate the market in a negative way to really see a give back of these gains and wipe out the last 8 or 9 candles going to the low or below the low of October the 5th, 2534. It could do that in 1 or 2 quick swoops to the downside, but so far, no. So the irony is, for subscribers, we have some subscribers who are still long from the Dow 22,300 level. That's 223. But just under 223 really in the Dow Diamonds, the trading vehicle, and you're trading now at 231.34, big gain. Then at about 5 days ago, last Thursday, we went short a small position, the Dow, and that, of course, has worked against us. So people who have both have had negative return for the last 5-6 sessions. And the ones who are short, we are getting close. Why is it that I always get this frog in the throat? We still have the short position, getting close to the stop. I don't have big percentage stops at all. If we're out, we're out. We can always get back in. So that's an irony. Meantime, we've got long positions that are doing extremely well. If you look at the XLF, which is the financial sector, even with Goldman Sachs getting smacked yesterday, it's holding very well at the 2634 level. If you look at some of the bank stocks, JP Morgan making new all-time highs, and that's how it goes. Goldman Sachs got smacked yesterday. It's coming back today nicely. It's up 5.57. Yesterday, we took a real beating to the downside. And that's good. And our position that we have, Bank of America, is in fact at new recovery highs in a leg D in the 120-minute chart. Talking about a leg D in the 120-minute chart, let me just go to the 120-minute chart of the E-mini, which I forgot to look at. This is in an up channel. It went right to what I said this morning, 2562s is going to be strong resistance. It went to 2562.25. It's pulled back to the 9-period moving average. This is a peak E in the Chapman wave. D and E is where you got to be careful. And now look what's happened. Holding the 9-period moving average, the MACD is a little bit overbought. The stochastic's pulling back quite sharply. On balance, has just deteriorated terribly. I'm not sure why. That's the way it is. Parameters to look at. Let's look at the 10-minute chart. 10-minute chart says peak E high this morning, just about 10 o'clock. Right there, 9:30, I'm sorry, 9:30 at 25.60.25, pulls back to the green line, the 200, very important 200-period moving average, pops up, and now the best I can see at this point is an H pattern that goes to a lowercase m, making it 25.60 to 25, just under 25.61. Key resistance, if it goes above that, you could test the high of the day. If it goes underneath 25.56, that's going to deteriorate. The market's going to start to pull back quite sharply. Now, let's just quickly run the numbers. We've got a few minutes here before the break. Here we go. S&P, SPX.X. S&P also just squeaking to a new high. Did the E-mini, but look what's going on here. That was 947. That's it. So this is a leg G/C in the daily with another little doji type candle. MACD's deteriorating. Stochastic's very good at 96. On balance volume very at this particular point, the on-balance volume is giving us a clue that we're becoming somewhat overbought. Now let's go to the QQQ. QQQ right now down 8 cents at 148.95. This is a leg D, and I'm going to be watching this very closely because if the SMHs, which is the semiconductor index, actually starts a sharp turn, it's in leg G/C, down 20 cents at 97.49. And if you look at NVIDIA, one of the key ingredients, had a bit of a pullback today. It's down $1.40. It's in a leg. It's in a leg D. Makes a peak D for can't break above 198.90. And if you look at LRCX, which we spoke about yesterday, Lam Research, LRCX, that is up $1.66 off the highs. I'll be back. Basil Chapman, Tiger Conditions Hour.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So a couple of questions just came in, but let me just finish my opening segment. So Intel is holding the 9-period moving average. It's at 39.83. The MACD and stochastic, the MACD is starting to weaken. The stochastic is still good at 90%. This is going to be a quick take. I could easily have one more little pop-up over 39.95, the high of October the 10th for leg D, and then we've got to watch it closely. But the weekly chart is still very positive, man. I tell you, it's very interesting. Okay, then NVIDIA, a question came in. Where would you start taking profits in NVIDIA? So it's down $1.24 at 196.51. The way I'm looking at it, I had a look at it last night, and this little candle in leg D is going to be very important. We're 2.5 days into the week. We've got 2.5 days to go. Where it lands up, I have no idea. Now, I have a clue, and that's suggesting that there's a good chance that for now, NVIDIA's upside is a bit limited. You know, when stocks get to 95, 96, I invariably look at them as $103 to $105 stocks. It's kind of the way it works when you get to that level. And then there's a pullback. And then the next level is usually like 118 to 122. So this is 196. I don't think it has the same cachet as look at this leg F in the monthly chart. Look at this, very steady, but starting to become stretched technically, moving the weekly. I would not be surprised if NVIDIA has a little bit of a pullback. Now, I know if you've been in a long position, I don't want to change your long position. I'd rather say to you, look, it's at 196.67. If you're in for the long term, you've got to have your stops much wider. I'd have two closes under 192, the 9-period daily moving average, and then I'd start saying, you know what, for 4 or 5 points, I'm going to take some profits here. I can always put it back. Maybe one of the gaps, because so many gaps, all the way down to the 182 level, 183 level. So that's what I'm thinking. Then I look at it and I say, wait a minute. Why give away 4 or 5 points? Because it's in a leg D. It's a very clear D. There's nothing else there. It's an alternate count. It could go from 198.90, the high that was made yesterday, and it could go maybe to 201, 203. So that's 6 points up. So I would do this. This candle right now has a wick where it opened, it went lower down. It went to 193.32. And now it's at 196.77. If you are, the question must have arose because you said to yourself, wow, I've got a nice gain. Now what do I do? Therefore, there's a hint of nervousness in the question. So I'm going to answer the question by saying, if you're starting to become a little nervous about giving up profits, then why don't you make a compromise and at 195 on the day, put a stop in at 195. You're giving away your 1 3/4 points from where it is. And if it does pop up, that's fine. But you're not sacrificing, say, 4 or 5 points from here to the downside and then having to make a decision. So you could have it as a trading stop, that's fine. But if you want, and I don't get out of the position, just get out of a small part of the position, and that would make sense to me. And let it take you out, because it's 196.73. I think all the upside bumps are actually done for the day. Hey, famous last words. But that's what I'm thinking here. And if that's the case, then you should see a slide to 196.30 by a little later on today, and that still gives you tomorrow in which to make a decision. But that's what I'm thinking. Don't give away some of the gains right now and then have to sort of make a decision under 192. Rather 4 points higher, 4 or 5 points higher. Say, you know what, at this level, I'm going to put a fairly tight stop in. If it takes me out, the MACD is good, starting to turn down. Stochastic's really good at 96%. I don't want to be taken out if there's still much room. Or you could even give it 2 points, 194.65, let's say. Give it 2 points, and then let's see what happens. And we can talk about it again maybe tomorrow or the next day. So that's NVIDIA. And as I say, there's nothing to say get out of your long-term position at all right now. However, if you look at well, I don't want to go into that right now. I promised that I would finish up. I'll be looking at gold. So gold right now, this is very interesting. Gold was a little deeper down. It's now minus 3.5. 1282.7. You see this give back, and that's what I was very nervous about. I said before that it gave a real nice bounce, a left side, right side price time match, successful one, with a bounce off the low that was made on the, I think it was the 6th or something, 6th of October at 1262, bounced all the way to 1308. Then it comes back down. Now it's trading at 1282. I think at best is you're looking at an arch formation that can go into the lowercase h that goes to a lowercase m with a retest of 1274, the 200 period moving average. It'll have to have a sudden move down in the dollar. And the dollar right now is holding okay. It's up 6 cents at 93.56. Not a great move, but it is showing some strength in a pattern that could have been easily a very weak pattern in the technicals, but it's the weekly chart. And the reason why we went along the day of the low of September the 8th is because I liked the 35-week left side, right side price time match, 73, 74 weeks altogether, and 70 weeks altogether. And what I liked very much is that the MACD and stochastic were already starting to show signs of positive, not aggressive, but positive sign of rallying. So I'm just saying, I think the dollar still has a little more to go, and then we'll start looking at gold as if to say, hey, maybe it's ready to buy. Another question I had was Goldman Sachs. I just did Goldman Sachs. It's up 5 at 241. I'm not sure it's going to save the day. This is a little bit too deep. The MACD pulled back a little wide between the fast-moving average and the slow-moving average. So I need another day or two to really assess if Goldman Sachs has made at least a short-term top, or whether the weekly at peak C is still going to go to a D now rather than after a week or two of consolidation. Bob wanted to know, that was Bob. And then the next one was RIG. Let's look at RIG, which is Transocean. Transocean made a peak A, B, C, D. Yeah, it made a G top. Unusual, but this is a pattern that I'm talking about. We've just spoken about it a few times now. Not an R, but a G. This right shoulder with the fading technicals, this is what you got to really be careful. The right arm extension, I think that this is now going to tell me a lot about what happens with the oil service area. And just watch it. It's at 10.37, down 42 cents. My thinking is at 1060, it has to break above 1065 to regain its upside energy. But more likely, this is a G top. And at the same time, I'm looking at 10. It's at 1038, a close under 10. 2 days in a row says that it's done for at least this time frame. The weekly needs the weekly has had a strong move to the upside and needs a little bit of a rest. All right. looks like my throat needs a rest. A question about VOD, Vodafone, VOD. Yeah, all right. You know what? I'm going to write it down, and I will come back to it after the break. Let me just finish up here with all the technical information before the next break comes. Let me just double check. Yeah, we've got 43 seconds. Good. I've got time. So we want to go to high-grade copper. HG, I think that's pulling back. Yep, it's pulling back from a peak D. A leg E in the weekly, a leg D in the monthly. I think copper at 3.17 is probably going to test the 312 area. The next thing I want to look at is crude oil, which was up earlier. Is it still up? It's up 23 cents. Nice move up, and that kind of confirms what I'm looking at in my commodity index, which has almost the same pattern. So this is a B. Yeah, we'll do both crude oil, and we'll look at Vodafone when I get back. Dow's up 147. S&P's only up 3.26. This is an IBM-related move up, but the Dow is well over 23.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So I've got a couple of questions. First question was about, here we go. This is about Hain, Hayn, which is Haynes International Inc. Now, this is not the Haynes, the briefs and things like that. No, I think this is something else. So I don't know what this is. Hayn trading at 36.46, down 3 cents. Underwear. It is underwear. It's not HIN. It's HAY. No tags. Oh, so that's amazing. Look, no tags. I don't see any tags on the chart whatsoever. Trading at 36.46. It made a peak E. Now, this is a very interesting chart. I'm looking to see that it looked to me like there was no volume here. Yes, I'm correct. There's no. This is not Hanes. This is a different one. Hain is food. Oh, Hain is food. All right, whatever it is. I'll look it up in a minute. But this doesn't have very much volume. And when I'm looking at the chart, I said, this is the most unusual chart. I haven't seen one like this in ages, except it looks very much like it has a very low volume. And then I'm looking at the volume and I see 42,000, 72,000. So I don't know who's trading this. So, Tim, you want to look at it. Do you see current price for Hain as a good entry, or should I look for a pullback? Thanks, Tim. So, Tim, I'm going to suggest that it is in the pullback. It's made a high of 38.88 on the 5th of October, peak E. It's pulling back under the 200 period simple moving average. It looks like it wants to target the 35.61 200 period exponential moving average. I've just given it a little time, but please remind me. Today's Wednesday. Please remind me maybe Friday or Monday. Let's have a look at it again. I want the weekly chart single leg 8 to test. I don't want you to break 35. But I also don't want you to break to the upside above 38 before then. So if it's trading above 37.50, just text me or email me. And if it's just still in the chop, slightly lower lows, slightly lower highs, let's wait a little bit. I like the takeoff. I don't like the monthly chart at all. So let's just hold off. Parameters 36. Let's call it 36.50. Must hold over the next few days. If it pops up, it has to really get into the 30s. It has to get into the 38s. The moment it gets into the 38s, it's very good action. The weekly will start to improve. Next question I have was Vodafone, VOD. I'm calling it Vodafone. Yeah, Vodafone Group PLC. Made a peak D in the monthly and the weekly right at the 200 period moving average. Actually, the monthly looks the same as Hain, except this one has volume. Well, not quite. Yeah, it's had quite a bit of a pullback. I can see symmetry, cups and arches and everything. Boy. So what is the question? Let's see. I'm going to go to, Peaky wants to know about it. Vodafone. So the question is it a buy? And the answer is, in your case, because you like to look at things longer term, you're prepared to put up with some noise shorter term. I'm going to say keep it on your list. It's made the same single leg A to the upside as most of the others we've spoken about this morning. I want to see how it holds at 28.94. I want to see how it holds 28.70. Let's call it 28.50. If it breaks 28.50 in the next 2 days, I'm just saying, hey, stay away. But if it holds very nicely, it has that look that says, you know what, I love to pop up. I might not go very far, but I'm making slightly lower highs and slightly lower lows. And at some point, the technicals are going to improve enough to break. And the thing to break is $30, a round number high, the week of the 11th of August. Hold off. It is your kind of stock, but because it gives a dividend, that dividend can make up for give you some leeway in the stop. I would prefer to try to place it closer to 28.80, 28.50 and see what happens. So just give me a note at any point in the next 2 days and we'll look at it again. So yes. Whoa, Rubik's Cube. All right. Let me go back to the questions here. So IBM. All right, let's look at IBM. Screams to the upside. Horrible chart formation. And all of a sudden they come out with news. Now, if the news is genuine that they've turned the corner because sales, expectations, profits, and the inventory or the services that they're providing is finding a big upgrade, I'm all the way with saying, great, in this whole rotational market, all of a sudden IBM becomes a player. We needed IBM. It was out of the loop. Now it's perhaps in the loop. But if it's only tax considerations, I'm skeptical about it holding the 160s. I got a feeling it's going to try to go back to the 152, 149 area. So I'm giving it a few days. So the question about IBM, yes, it obviously is making a huge difference in the Dow. You can see that. Look, IBM up 13 points, 160.37, almost 10%. But look at this, SPX up 0.13%. The Dow even with IBM up 0.64. The QQQ series up 0.03%. NYA, the New York Stock Exchange. So when I say to you that I was thinking that the 23,000 would be strong resistance, it didn't take into account you could suddenly get one stock, but a price is a price, and I'm not fighting the price. I'm saying, yes, it did go high, but look at the overall market. I'm seeing wear and tear. I'm seeing tiredness. The New York Stock Exchange is up 0.19%. It should be up screaming with the Dow. So you can't just have one index, the generals leading the soldiers. It just doesn't work that way. So I am a little skeptical here. The other thing is the IWM, IWM up 0.58, a better day than usual, still in this very narrow trading band. All I can say is it's strange. Yeah, I'll go through that right now. GE, my Dow Quartet, GE lousy, down 5 cents at 23.15. IBM, as we just saw, let's see, IBM trading at 146. Oh, that was yesterday. Today it's 160. That is a big move for IBM and has stopped dead right at the 200-period moving average in the weekly chart. Let's see what happens going into Tuesday of next week. Give it about 3-4 days, and we'll see what happens. I would love for it to hold very nicely. It needs it. I was speaking about IBM. I spoke to an engineer. What was it, about 3 years ago? I was at a wedding up in New York State. Near where's the military academy there? Anyway, near Hudson, and a guy said, "Oh yeah, I met." So he said, "Yeah, he works for IBM." I said, "Gee, what's been going on?" He says, IBM is a very long-term move. We've been slowly, he's in his upper management, we've been slowly trying to get into the 21st century. I think it's working, but it's way slower than any of us would have liked, and that was 3 years ago. So who knows? Maybe they've turned the corner. We'll see. What about Triple M? Triple M, almost at an all-time high at 218.30. Let's see, 219.75 was the high 4 days ago. Peak G/B, peak C in the weekly. So this could still go higher, and this is one of the leaders in the Dow as well. But UTX is really struggling here. It's had a lovely rally, but it's not even close to the all-time high of the 124s, or even, the 124s double top high. It's at 119.11. It's got a long way to go. So that gives you optimism looking out, but at the same time, short term, it's getting kind of tired in the daily chart. So I wanted to go through that question there. Another question I had was Apple. Apple right now trading at 160.16. So the question here was, is it about to turn down? Well, it's in a leg D. It's at resistance. I'm going to talk about the weekly chart pattern because that's the one that's quite fascinating. And the monthly is still only at peak C. And it says, looking out, Apple should still go to 165. 164.94 was the last all-time high. I'll be back. Basil Chapman, Tiger Ignitions Hour. Dow's up 148. S&P's up 3.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. Basil Chapman. We are back. Dow's up 147, S&P's up 3. I'm going to Sylvia, waiting patiently in Tampa, Florida. I'm sorry, Sylvia. I kind of overlooked you right there. How you doing?
That's okay, Basil. Good morning. I'm doing well, thank you.
Great.
Basil, I need your opinion on 2 equities, please. And once I give them to you, I'll go ahead and hang up so I can hear your opinion there.
Okay.
The first one is the XLE. I went short that via the ERY 2 days ago, and I added to it this morning. So that's one. And the second one, I want to know your opinion on Amazon as a short, please. Okay?
Okay, very good. So you're going to be
Thank
listening,
you.
so I'll give you a chance to get off the line, and you'll be ready to listen. Good. Thank you for calling, Sylvia. So let's go through this right now. XLE, I spoke about it yesterday. I said this is more like a rectangle formation, although I had an oval in it. And I said, you know, everything about it says it's got another day or two to break above the high of the 10th, which was 68.93. This is the S&P Select Energy Spider ETF, trading at 67.89, down 44 cents. And what I said is really in this pattern, even if it pops up, it should come back into the middle of this range toward the 68 level, 68.20 level. Well, today it pulled back. And Silver, your timing was, at least for the risk reward, was absolutely opportune. I think you did it beautifully. So what I'm going to suggest to you, I forgot what the inverse is, but it doesn't matter. I'm going to look at this, and all I'm saying to you is the MACD is turning down sharply. That's what I mentioned yesterday. Stochastic was fading way below 80%. That's what I mentioned yesterday. Said on balance volume's good, but it's not anywhere where it was when it made that peak F top right there on the 28th of September. I think that you have your eye on the prize right now, at least in the short term. My only concern is we've seen it over and over today, that single leg A to the upside in the weekly chart, stochastic at 90%, MACD still good. So I'm suggesting to you, stay in the position, but here are the parameters that I'd be looking for. You want to see a close below two levels. One is the low of the 12th of October, which is at 67.80. Today's low is so far 67.86, so it's got 7 cents to go. And if it does that, then you don't want to hang around like the IBB keeps doing, the biotechs. You want to go straight down, and you want to take out the low of the 2nd of October, 87.49. You don't want to just take it out. You want to close below it. And as soon as it does that, 87.30, the 200-period moving average becomes the focus. But what I'm going to suggest is that if you have enough, take something off. If you can get 67.35, somewhere under 67.40, I would take a little bit off, allow it to possibly bounce. If it goes right through the 200-period moving average, you could even put a trading stop to see if it does that. but this is where you can expect some kind of a bounce. If it does bounce, I could say a bounce towards 68.17, not even that, maybe 68.07 under the 9-period moving average. Then it's got to come right down and make a lower low. Lower highs and lower lows is the theme. That's what you want to see. So your entry is just more than perfect. It's outstanding. However, I am looking at the weekly, and the weekly suggests 66.88 is very strong 9-period exponential moving support. That's why I'm saying to you, take profits. You can always add that back on a bounce, because your target here is 67.30. That's where a stronger bounce or a breakdown is going to occur. That's very important. So that's the XLE. And Amazon, this is very interesting. Amazon trading right now hasn't made a new high. Here it is. IBM, Dow's up screaming at 23,140s. And Amazon, which should be leading the crowd, can't go above $1,011.47, the high of yesterday. Today's high is 10.90, days young, but so far this is a peak D. And that's really what I'm getting a little cautious about in terms of looking at so many daily charts that are in Ds and Es. Something's got to give. And I think it's going to be not necessarily a break to the downside, but I think at least a consolidation down. So Amazon right now, if you're shorted, I would make it. Look, the stochastic's 93%. That's good. MACD has been very strong. So a little brave of you to be short. But if you put it into context of that peak D that was made at the all-time high of 1083.31 the week of the 28th of July, this is lousy action for Amazon. And we are getting into the buying season. So I'm saying, yes, if you're shorting, but you want to see the target would be 997, the 9-period moving average. To get there, you want to see within 2 days a break sharply below the low of yesterday, 1004.34. You want to see a break of 1002, and you want to see it really quickly, and you want to see it by Friday at the latest. Preferably, I'd even say 1001 is really the level, the low of the 16th. You want to be taking that out, and it's going to happen soon. So that's a little bit more aggressive, but so far I think you're right. And I would just make a buy. For me, even though it's going to be a leg E, if it goes higher, maybe tomorrow, the next day, I would make a stop at 1,011. Give it a more than a point. Make it a 1,012.47. The high was 1,011.47. Just to give it a chance of a little bit of a leg E. But that's the way I'd be looking at it. So, yes. Next thing I had a question about 5. 5 is, this is one of the retails. This is a trendy close, 5 below ink, trendy close for $5 or less. Unbelievable, $5 or less. Don't even pay that for coffee, I think some people. I never buy coffee, but anyway. Yeah, peak C, it should go to a D. In the daily, it should go above 57.65. Leg D, I would not be surprised if it squeaks. It can just squeak to an E. It looks great. And if you're long, I'm not going to tell you to do anything other than to say, I think it's getting a little toppy shorter term. But I'm not going to say take off anything. Let's just see if it trades under 55.50 in the next 2 days. Just give me a yell and we'll have a look at it again. I think it first has to try for a leg D in the daily. Okay, so we've got a whole bunch of things here. Oh, we've got Ben. Ben, how are you? Ben in Tallahassee.
Good, Basil. How you doing?
I'm well, thank you.
Great.
So
2 questions on gold. I'm looking at the GLD on a monthly basis.
Oh, a monthly, yes.
Do you? First question is, do you feel that? I forget. It's right around 100. Do you feel that's a low? And then the second question is gold something you ever hold for the long term, or do you feel gold is more? Like when you have corporate stocks, many times it's easy to attach solid reasons whether to go long or short. In the world of gold, it seems like whether it's currencies or exchange rates or risks, global aspects. I'm just curious, do you ever hold gold for the long haul, and do you think that soon there could be a good reason to hold it long?
So gold coins like the Krugerrands that I've had for years and years and years, decades, I'm just holding it. That's as far as I'm concerned. Gold, you see, if you come from a family culture that says at some point, like on my wife's side, they had gold nuggets at one point during the war in Europe. And that's kind of what saved them. And that's that whole mentality. There's certain cultures that have had gold as payment, financial payment. And therefore, it becomes a tradition in families to say, hey, you've always got to have some gold around. You never know, and you never know. So that's one thing. So let me just say at the outset that as a part of a portfolio, the expression, hey, can you hold on?
Yeah, absolutely.
Okay. Van holding on,
Thanks.
we're talking about gold. And we're talking about gold, maybe as a long-term hold. What do I see? And I'm going to explain something about what I'm looking at. And it has to do with inflation and deflation. I'll be right back. Basil Chapman, guys, up 143. There's a piece up here.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks, we're back. So gold is this beautiful way of matching time price levels on the upside and the downside. Looking way out to 2020 or 2021 or something like that, I would not be surprised if we retest the all-time high, well, the most recent all-time high, the one back in 2011 of 1986 on the continuous contract. However, what I wanted to say is this. There are a couple of things that I'd be looking at. I do believe inflation is going to suddenly pick up and scare the daylights out of the Fed at some point. And that's going to be a big issue all the way around. It's going to be a big issue for the market as well. So I'm going to just answer it in two ways. How gold handles 1274 on the short term actually dictates for me a tremendous amount of what I'm looking at, looking out. And I'm thinking that later in the year, maybe it's this year, maybe it's next year, I do see a very strong rally for gold. But at first, I think it needs to continue this consolidation. And that's what I'm calling it. So you know what? I'm going to stall a little bit. I'm going to say, give me October. Let's talk about the longer term for November, going on from November. So all I'm going to say to you is, look, the parameters are very easy. If gold spirals in the next week and a half above 13.15, it's at 12.83 right now, I would have to say, you know what, that is really good action. If it just cannot get above 1,300, but in fact it takes out 12.70 support, I'm just looking at this as a lowercase h that goes to a lowercase m in the monthly, and it's just going to chop, chop, chop for another month or so before it really gets going. That's what I'm going to do right on the short term. But let's hold off about a week or so and let's look at it again. Hey, thanks for calling.
Do you feel the bottom is in, or do you feel that it actually has potential even retest the bottom?
No, the bottom that was made back in December of 2016 at 11.39.
Right.
No, I think gold is in play here for many other reasons, all of which I'll talk about. But no, I don't think so.
Great. Thanks a lot, Basil.
Thank you so much for calling. So, folks, and I had a quick question about Shop, which is Shopify Inc. trading at 98.74. Greg says, I'm in it for much lower down. You're waiting to add. What do you think of the stock? Greg, I'm going to suggest right at 98.74, just add a small amount, and on Friday we'll look at it again, okay? Hey, Basil Chapman, check out my opening call. I think you'll find it very informative, hopefully very helpful and profitable. And I will be back tomorrow at 8 o'clock. The show will be recorded.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.